Hello, and welcome in. This is the Bitcoin Escape Hatch, a Bitcoin-only education channel where the signals information and the outcome is financial freedom. Welcome to episode 2 of my Bitcoin 101 series. And today we're talking about what exactly Bitcoin is. And if you caught episode 1, you know why we need Bitcoin. We covered the madness of the endless money printing, debasement, and a system that is stacked against us. And today we're going to just keep it going. I'm going to break down what Bitcoin is as simply as I can with a bit of technical stuff, nothing too crazy, so you can see for yourself why it is the ultimate tool for real sovereignty. If you're new to this world and feeling overwhelmed by buzzwords like blockchain or crypto, or if you've heard Bitcoin being called everything from digital gold to scam, even just the new Jane Street price manipulation stuff, all that price stuff doesn't matter. This video is for you and is a gentle on-ramp for you to understand fundamentally what makes Bitcoin amazing and why it's perfect for the individual, and we don't care what the institutions are doing. So, by the end of this, I hope you see Bitcoin not as some mysterious tech fad, but as a revolutionary tool for personal sovereignty in a world of broken money. And as I've said before, if even one person walks away and they think, hey, I got it, maybe I should learn a little bit more about this Bitcoin thing, then mission success. Before we go any further, I just wanted to pause and say something important. And I probably should have included this in the first video of this series, but better late than never. One of the most important things you're going to come across in Bitcoin is don't trust, verify. That means don't take anybody's word for it. Go check for yourself. Slay your heroes, question everything you hear, everything you read, and even everything I say. Everything I'm sharing is verifiable, so make sure you check for yourself. This is a core part of being a sovereign individual. You verify things for yourself so that you can know it for yourself, right? And this also helps you during the volatility and will help you see dips as buying opportunities instead of selling opportunities. And I encourage you to do this. Please, seriously, verify everything for yourself. Go and verify the debasement numbers, which we covered in episode 1. Get a TradingView account. Go look up any currency of your choice. Type in for an example, USM2, which is the M2 money supply. And I guarantee you every single currency is going to look like a hockey stick and up to the right because they can't stop printing. Go read up about the Cantillon effect, an economic concept named after an 18th century economist, Richard Cantillon, when even back then he described how new money injected into the economy does not affect all individuals and sectors equally. Also, go verify mining numbers. I mean, mining FUD is one of the most common things you can hear about when it comes to learning about Bitcoin, especially if you're early in your journey. Go verify that 52 to 56% of Bitcoin mining is now run on renewable, and that there's countries out there, bonus points if you know who this is, that are mining Bitcoin as geothermal energy from a volcano. And it's pretty awesome. And there's a lot of other awesome things happening in the mining space, which I'm going to cover in the mining video. Also, go and see for yourself. You can go and verify every single transaction that's ever taken place on the Bitcoin blockchain all the way back until the Genesis block in 2009. Verify for yourself. And I bet you can't do that with cash. I know you can't do that with cash. Imagine if banks let you audit them or verify all the transactions. Or imagine if you could verify where all your tax money goes. Imagine if you could track all the money you pay in taxes to see exactly where it goes. If we could, I bet you'd be shocked. And remember, learning about Bitcoin is a constant journey. You're always going to be learning, and I encourage you to always be learning. Don't just get to a point where you've bought Bitcoin, sent it to cold storage, and just sit there. Keep learning. Keep learning. That's the one awesome thing about it being a sovereign individual. You can keep learning. It doesn't even have to be about Bitcoin. The habit of independent verification is exactly what will protect you in the long run. It's what helped me see the red flags when it came to things like NFTs and yield platforms like BlockFi and FTX, even when some of the most prominent people in Bitcoin were pushing it. And I'm not going to name any names, but it was sad because a lot of regular people got wrecked. Lastly, if someone in the space anywhere is telling you anything other than putting your Bitcoin into cold storage, you're being misled. That is the fundamental reason or core of what makes you a sovereign individual, is when you control the keys to your own money. Okay, I'm sorry about that little rant. Sometimes I get a little passionate, I guess. Let's get into it. What exactly is Bitcoin? Bitcoin is a decentralized digital currency that allows people to send and receive value over the internet without needing banks, governments, or any middlemen, all secured by a global network of computers following unbreakable rules. It's a peer to peer electronic cash, as Satoshi Nakamoto described it in the original white paper, meaning you can transfer value like you were emailing money, but without a trusted third party to oversee it. All you need is a wallet that holds Bitcoin and an internet connection. And that's pretty powerful if you really think about those two sentences on their own. This decentralization provides several key benefits. It makes the system resilient because if one part fails or is attacked, the rest keeps operating. It prevents censorship. No authority can block transactions or seize funds without consensus from the entire network. It promotes fairness by removing the need to trust a central entity that could manipulate the system for its own gain. It ensures transparency as everyone can verify the rules and transactions independently. And I love that. Without decentralization, systems would become vulnerable to corruption, shutdowns, or unfair control, as seen in traditional banking, where accounts can be frozen or policies can be changed unilaterally. This isn't just a theory. Bitcoin has been running flawlessly since 2009. As of 2026, over 19.8 million Bitcoins have been mined, with the network processing billions in value daily, all without a CEO, a marketing team, or headquarters, which is amazing. It all started with the white paper. In 2008, an anonymous person or group, I like to think it's an individual, named Satoshi, published the Bitcoin white paper. It was titled Bitcoin, a peer-to-peer electronic cash system. I'll post it down below if you're interested in reading it. It solved the double spend problem. How to ensure that digital money isn't copied and pasted like a file without trusting a central authority. That's the key point. The double spend problem is a key challenge with digital currencies. Since digital information can be easily duplicated, like I said, copying and pasting a document on your computer, someone could try spend the same Bitcoin twice, sending it to two different people at the same time. In traditional systems, banks prevent this by acting as a trusted middleman to verify and clear transactions. But that's not what we want, right? Bitcoin solves it through its decentralized network and blockchain, where every transaction is publicly recorded and verified by multiple computers, making it impossible to spend the same coin twice without the network detecting and rejecting the fraud. I thought it would be helpful at this point just to break down a few of the most common phrases or functions that you're going to hear about Bitcoin. And in later episodes, we're going to go much deeper into each one, detailing everything, getting a little technical, all that awesome stuff so you can understand fully, which is the whole reason for this series. We're going to start with the blockchain. This is the heart of Bitcoin. The blockchain is a public, ad-only digital ledger that records all transaction in a chain of blocks. And once it's added to the chain, which is about every 10 minutes, it's sealed with a cryptographic hash, a unique code based on the block's contents that also links it to the previous block, the blockchain. This linking creates an unbreakable chain. If anyone tries to change a past transaction, that hash would no longer match and the network would reject it. Blockchain's aspects include immutability. Once the data is added, it can't be altered. Transparency. Anyone can view the entire history, which is the part that I love about it. And security, protected by cryptography and consensus. It ensures trust without central authority by letting everyone verify the records for themselves. And I know I keep saying it, but I love that part about Bitcoin. Mining, the big one. Miners are people or groups running special computers that compete to add the next block to the blockchain. They do this by solving complex mathematical puzzles, which require significant computing power and energy. All these miners compete in a global race to see who can complete the next block first. The first miner to solve a block gets to add it to the ledger and is rewarded with the Bitcoin, which is the block reward, and all the fees from the transactions within that block. I hope that makes sense. This process is called proof of work, and it has several key aspects. It secures the network by making it costly to attack. An attacker would need massive amounts of resources to outpace the honest miners, the miners that are already going. It distributes new Bitcoins fairly through competition. and it decentralizes control by allowing anyone to participate. The energy use is a trade off for security, but it also incentivizes efficiency and renewable resources. Wallets and keys. To use Bitcoin, you need a wallet, which it comes in form of a software or hardware that manages your Bitcoins. It generates a public address, a string of characters where others can send Bitcoins to you, which is like your bank account number, and private keys, which are just secret code. It's your 12 or 24 words, which you write down and you never digitize, you never show anyone, you never take pictures of it, which proves ownership and allows you to sign the transaction to send or spend your Bitcoins. Think of it as your bank account PIN. When you make a transaction, you sign it with your private key, like I was saying, and the network verifies it. A few aspects include security. Like I always say, never share your private keys, as losing them means losing access to all your Bitcoin forever. Convenience. Wallets can be apps on your phone or secure hardware devices, and ownership. You control your funds directly without relying on a bank. Hardware wallets like cold cards and tracers store keys offline to protect against hacks, because hot wallets, which are apps or wallets that you have on an exchange like Coinbase, they are not safe. I'm just going to tell you that they are not safe. Cold storage, which is a hardware wallet where you generate the keys yourself, you generate those 12 to 24 words yourself, is the most important part of owning Bitcoin. If you don't own your own keys, they are not your coins. Like I said, we're going to dive really deep into cold storage wallets, how they work, how the addresses are generated, because I think it's super interesting. Maybe even a step-by-step tutorial on how to set up a Bitcoin-only tracer, because I feel like for newcomers, that's a pretty easy on-ramp to cold storage. Tracer's done a great job for newcomers. So yeah, if you are watching this, let me know what you think about me doing that. Onwards, nodes and decentralization. Nodes are the computers running Bitcoin software that maintain the network. Full nodes store the entire blockchain and independently verify every transaction and block that comes through against the rules, which is the software they have on their devices. The aspects of nodes include validation. They check for double spends, valid signatures, and rule compliance. Propagation. They share new transactions and blocks with others. And decentralization. Anyone can run a node, ensuring no single point of control, which is awesome. This setup makes Bitcoin robust. Even if some nodes go offline or crash, others continue, and no node has to trust another. They all confirm everything themselves with the Bitcoin software they run on their nodes. Halvings. Every 210,000 blocks, which is roughly 4 years, the rewards that miners get from mining the Bitcoin gets cut in half. This slows the creation of new Bitcoins, leading to the 21 million cap, which we know is around 2140, which I think is awesome. Aspects of the halving include predictability. The schedule is coded and can't be changed. Scarcity. It reduces supply growth, supporting value as adoption increases. We've had 4 halvings so far, which doesn't sound a lot if you think about Bitcoin being over 17 years old now, each marking a milestone in Bitcoin's maturation. The magic of Bitcoin shines in its security and empowerment. Why is it so revolutionary? In security terms, it's resistant to hacks because there's no central honeypot, no central point of failure. Attacks like a 51% attack would cost billions in equipment and energy, and even then, the honest nodes would reject invalid changes, making it temporary at best. I'm going to go over what a 51% attack is real quick. A 51% attack is theoretical. Remember that. It's a theoretical vulnerability in Bitcoin where an attacker controls more than 50% of the network's mining power, the hash rate, which would let them potentially double spend coins, spend the same Bitcoin twice, or go back and change how many Bitcoins a block rewards, or censor transactions by rewriting recent blockchain history. And the reason why I say it's theoretical, because if you were going to spend hundreds of billions of dollars just to go back and change a few transactions, you would also need to outpace the honest network, which means by the end of the day, if they just took all those billions and bought Bitcoin with it and participated honestly, it would have been a net positive for them in the long run, which I love, right? It encourages people to participate honestly in the network. Supply cap. Bitcoin's 21 million supply cap is the most important rule in the protocol. It is enforced in a way that makes it impossible to change without destroying what Bitcoin is. and we're going to break it down step by step. The 21 million cap is hard coded in the rules. The number 21 million isn't a suggestion or a target. It's a mathematical limit written directly into Bitcoin's source code. Specifically, the total supply is defined by the starting block reward, which was 50 Bitcoin in 2009, and the halving schedule. The halvings continue until the block rewards drop below 1 Satoshi, which happens around block 6,930,000. And I love that we know that, which is roughly the year 2140. At that point, no new Bitcoins are created ever. And if you're wondering if this is a good or bad thing, it's a good thing. Around the year 2140, when Bitcoin rewards drop below 1 Satoshi, which is Bitcoin's smallest unit, if you didn't know, something remarkable will happen. Bitcoin will fully bootstrap itself through what's often called the free market transition. From that point on, the network will be powered entirely by the activity on the network itself. Miners will earn rewards exclusively from transaction fees paid by the users, rather than new coin issuance. Bitcoin's 21 million supply cap isn't arbitrary. It's an exact mathematical outcome of a beautiful infinite geometric series baked into the protocol. And this is not an estimate. It's a precise, unalterable outcome of the halving function. That's why it's so important. But the cool thing is that this number was more of an educated guess, as said by Satoshi himself. Here's what he said in an email between himself and Mike Hearn way back in the day when he was trying to decide on supply. My choice for the number of coins and distribution schedule was an educated guess. It was a difficult choice because once the network is going, it's locked in and we're stuck with it. I wanted to pick something that would make prices similar to existing currencies, but without knowing the future, this was very hard. I ended up picking something in the middle. If Bitcoin remains a small niche, it'll be worth less per unit than existing currencies. If you imagine it being used for some fraction of world commerce, then there's only going to be 21 million coins for the whole world, so it would be worth much more per unit. And I love that just looking back at it, because that's a pretty amazing guess if you ask me. Secondly, we're going to keep going with the supply cap here. The supply cap is enforced by every node in the network. Bitcoin is decentralized. And what that means is there are thousands of independent computers, which are nodes, all around the world, and they all run the exact same set of rules, which is the software. Every full node independently checks every block and every transaction against those rules. If a miner or anyone tries to create a block with a reward higher than what's allowed for that block, every honest node would reject it immediately, flag that sender, and ban them, and that block simply won't propagate. The network just ignores anything that doesn't fit the rules, which is awesome. That's consensus in action. No single node or miner can force a change. The majority must agree, and they only agree on the original rules. The same goes for people who hold large coins. It doesn't matter how many miners somebody has or how many coins they have, nobody can change the rules without consensus. That being said, third, changing the cap. This would require what's called a hard fork. And hard forks that increase supply never succeed, and they never have, despite a few attempts. To raise the 21 million cap, you'd need to change the code, specifically the subsidy calculation in the consensus rules. That would create a new version of Bitcoin with different rules, essentially turning it into something entirely different. Like, think of it, if you were to change the supply cap within Bitcoin's rules, it would just create another Bitcoin. What makes Bitcoin Bitcoin is its supply cap. That absolute scarcity etched into its code is what gives Bitcoin its ultimate value, or intrinsic value for the boomers out there. A hard fork would mean creating a deviation from Bitcoin, a spinoff that breaks from the original promise. And to be honest, that's basically what every other coin out there is. From Ethereum to Fartcoin, they're all some sort of fork or imitation of Bitcoin, but none capture the purity and the unchangeable scarcity. Onwards. For any change to the 21 million cap to actually stick and become a new Bitcoin, an overwhelming majority of the economic nodes, miners with hash power, major exchanges, wallet providers, businesses that accept or hold Bitcoin, and users with real skin in the game, meaning they actually hold Bitcoin, would all have to voluntarily upgrade and run the new software, which doesn't sound very smart if you actually hold coins. You don't want to increase the supply of something you hold, right? Think of it like cash. It keeps devaluing because they keep adding more units. This would also devalue the coins that they already hold, which no one is going to do. And that's what adds to the beauty of Bitcoin's consensus network. It's self-protecting, where economic incentives and decentralized rules make scarcity unbreakable. We want that, right? In other words, they would have to collectively agree to abandon the original rules and switch to a different chain, one where the supply limit is no longer 21 million. All the value, liquidity, hash power, adoption, and network effects stay on the original chain with the 21 million cap. That's the key. The altered chain might exist technically, but it has no meaningful price, no users, and no future. That's why changing the cap is effectively impossible without destroying what Bitcoin is. The economic majority has to betray the very rules that give Bitcoin its value, and they have zero incentives to do so. And just to kind of differentiate between the forks, one chain, which is the original Bitcoin, and the 21 million cap with all the value, hash power, and adoption, and then you have the other chain that has more coins but almost no value because no one trusts it or use it. And we've seen this before. There's Bitcoin Cash, Bitcoin SV, and others have forked to change the rules, and they all end up in the same place, tiny fractions of Bitcoin's value, which is the depreciating market cap. The market always punishes supply inflation attempts brutally. So the cap isn't protected by code alone. It's protected by economics, network effects, and the fact that anyone who tries to change it would create a worthless fork and destroy their own credibility. And that's happened before. Finally, the cap is verifiable by anyone. And this is one of the things I love. I love that anybody can see everything about Bitcoin. No bar to entry for anyone curious enough to go see for themselves. Verify, so to say. Remember in the beginning of this, I'm always going to encourage people to verify for themselves. You don't have to trust me, a developer, or any company. Download a full node and the software, sync to the blockchain, and you can personally verify the total supply, the current block reward, the halving schedule, and every single transaction all the way back to the Genesis block that started it all in 2009. And like that, come on, like that's amazing. Everything is transparent and auditable. That's the beauty of don't trust, verify. In short, Bitcoin's 21 million cap is enforced by hard code math in the protocol, universal consensus rules across thousands of independent nodes, and economic incentives that make changing it suicidal for anyone who tries. Bitcoin can never be changed in any meaningful way without breaking Bitcoin itself. And that's exactly why it's so powerful. For the first time in history, we have a money with a supply limit that no one, not even the most powerful institutions, can override. Just remember this the next time you see a boomer or banker on LinkedIn or X shouting, Bitcoin has no intrinsic value, because that seems to be their favorite talking point. In my opinion, everything we just covered is worth more than anything you can measure on a stock performance sheet. Scarcity that can't be printed away, ownership you actually control, no permission slips, and no freeze buttons. A system that can't be gamed by the insiders or debased by central planners. And that's why I think a lot of boomers don't like it. They can't get in and take advantage before anybody else gets a chance to, like the houses they bought for cents on the dollar. Bitcoin gives you the ability to pass real, verifiable wealth to your kids without it being quietly stolen by inflation or seized by gatekeepers. That's not intrinsic value in the way that traditional finance means it. It's sovereignty value. It's freedom value. It's the kind of value that survives when paper promises and trust in institutions collapse. That's sovereignty at a protocol level, and that's why it matters. For over 17 years since Bitcoin's inception, there have been zero successful double spends on the main chain. The economic incentives always encourage honest behavior because that's more profitable than attacks, like I was saying before. It empowers individuals. Self-custody means you control your money. No banks can freeze your account for political reasons. You can send value across borders instantly, cheaply, and remittances that would take anywhere from 10 to 12% of a transaction now cost pennies via Bitcoin's Lightning Network. And we're going to dive deep into Lightning in that episode because they are just exploding. Bitcoin isn't perfect. Prices can swing as a young, highly liquid asset does. And like any innovation, it's attracted scrutiny. But its track record speaks volumes. It has survived multiple crashes. Bans like China's repeated attempts, I think they're like 21 attempts, and ways of regulation, which I think is going to change with ETF adoption. In essence, Bitcoin is sound money reborn. I'm sure you've heard other people say that before. Scarce, verifiable, portable, and free from manipulation. And that's super important. Okay, I got 7 things for you to remember about Bitcoin as you continue your journey. Number 1, Bitcoin is a decentralized digital money with a strict 21 million cap, no inflation ever. This means no central authority can print more to devalue what you own, flipping the script on fiat's endless dilution and giving you money that's truly scarce and verifiable by design. Number 2, the blockchain is an immutable ledger secured by mining's proof of work. It's like an unbreakable chain of records where every transaction is permanently etched and verified by the network, ensuring trust without needing a middleman and making tampering impossible without the whole system rejecting it. Number 3, wallets give you true ownership. Your keys, your coins. With the wallet, you hold the private keys that prove your Bitcoin is yours alone, empowering you to control your funds directly without relying on banks that can freeze or seize them at any time. That's an important one. Number 4, halvings create scarcity and drive long-term value. Every 4 years, the reward for new Bitcoins halves, slowing supply like a faucet turning off, which builds scarcity over time, helps protect your holdings from the debasement we've seen in traditional money. Number 5, it's global, borderless, and censorship resistant. Bitcoin lets you send value to anyone worldwide without borders or permission, bypassing restrictions and censorship that governments or banks can impose on fiat transfers. Number 6, real adoption is growing faster than I think anybody realizes. Nations, companies, and everyday people. From El Salvador using it as legal tender to companies like MicroStrategy holding billions as a hedge, and ordinary folks in high inflation countries turning to it for savings. Bitcoin's use is expanding because it's proving its worth in the real world in many, many ways. And finally, number 7, it's not just an investment, it's a hedge against a broken system. Bitcoin protects your wealth from inflation, debasement, and control in a system that's rigged against savers, offering hope for true financial freedom where your labor's value can't be quietly stolen away. Bitcoin's strength is in our education, because when you understand what Bitcoin truly is and how it empowers the individual, you start seeing dips as massive buying opportunities and not emotional roller coasters. Before I end, I just wanted to say a few things. If you're here, thank you so much. I really appreciate it. This one's gone way longer than I expected. When I first got into Bitcoin, like when I first really got it, I had like this freak out moment because I thought everybody was going to buy all the Bitcoin available before I had a chance to load my bags. And I remember hearing Michael Saylor from MicroStrategy say the same thing. He said the first night he got it, he couldn't sleep, and the next morning he bought like $100 million worth. Now, that is nice, and I wish I could buy that much. But where I'm trying to go with this is I'm hoping that I can flip on that orange light for people, everyday people, individuals like me and you. And when you start small. Start with $10 if you want. Shuffle whatever you have left at the end of your 2-week pay cycle through what's called a dollar cost average cycle or strategy, where you just buy a little bit every week. Do this for 2 to 3 years. And I've said this in previous videos, and you'll be surprised by how much your stack has grown. Just want to say that this is not financial advice. And I just thank you so much for your attention today. I did not expect this to be like a giant video. Anyways, next up, episode 3, Bitcoin's economics, supply demand. We're going to dive deep into the halving and all that awesome stuff. And remember, if you're going to buy Bitcoin, send it to cold storage. Let Bitcoin be your escape hatch to freedom. Thank you so much for being here. I'll see you in the next one. Peace out.